Are you wondering whether it is time for you to incorporate your business or just stay a sole proprietor if you run a small business in Canada? Well, in this video, that is what you're going to learn. You're going to learn the pros and cons of incorporating and honestly find out whether it's actually just a big waste of money. Hey, my name's Jessica Morehouse and welcome back to my channel. This channel is about all things money. So if you are interested in learning more about entrepreneurship and small business and taxes and also investing and budgeting and everything under the sun, personal finance, that is what this channel is all about. So make sure if you're not already to hit that subscribe and that bell notification so you can find out when I have new videos coming out, and I will have plenty more coming out. And also for any of you who are already subscribed and you're a long-time viewer, hello! And I'm so excited that you're here, and look at my new YouTube studio. Not bad, right? It took me several months to put this together. And I think I finally got it right. Got a new fancy lens, got some fun colored lights, and doing the YouTube thing. What do you think? Looks good? Let me know in the comments if you like it, because I can't change it now. I bought way too many lights and I have to use them all. So this is what we got. This is what we got. In any case, I wanted to do this video. This was actually, I did a call out for suggestions on topics, and this was a topic that someone asked me to do on. And honestly, I've been getting questions about this and comments over the past months and years about, hey, can you do a video about whether I should incorporate my business or not? And I know the reason why you are wondering this, because I used to wonder for years, should I incorporate? Because I feel like if you're running your own small business, oh my gosh, there will be so many opinions. And I personally felt so much pressure to incorporate my business, honestly, before I was quite ready. And here's the thing I'm going to tell you right now. I took 5.5 years. I was a sole proprietor for 5.5 years before I incorporated, and I do not regret a thing, because I feel like one of the worst things you can do is incorporate before you are ready. Even though there are a ton of amazing benefits of being incorporated, it makes things so much more complicated. There are quite a few costs involved, and it just does not make sense for most people who are just starting out. So I'm going to share what are some of the big benefits and just some things to be aware of. So you, by the end of this video, will have a clear idea whether it makes sense or not. I would also tell you though, if you're still not sure, and quite honestly, it is a big decision, please, please, please talk to an accountant. So anyways, we have a lot to talk about in this video, so let's get to it. Okay, so if you're new or if you just need a refresher on who the heck I am and why I'm talking to you about small business, it's because I run my own small business. I started this small business, now called More Money Media Inc. It's a financial education company, back in 2017. Now, before that, I was also running the business, but it was my side hustle. I did it on the weekends, the night, whenever I had free time, and I had a day job. But in January 2017, I left that job and then, figured out how to make a full-time business. And then 5.5 years later, it finally made sense for me to incorporate this. I will say though, I kind of miss some parts of being a sole proprietor. There's a lot of great things about being a sole proprietor. It just is more simple, it's cheaper, and it honestly makes the most sense for most people, especially if you're a freelancer or you have a very simple business. But, you may be at a stage in your business where it doesn't make sense anymore for you to be a sole proprietor. So let's get into some of the good stuff. Let's talk about what are some of the big benefits of being a corporation. All right, so the biggest benefit, and this is the one that I hear over and over again from people, is why they want to incorporate, is liability protection. Now, I think honestly, a lot of people misunderstand how liability protection works with your corporation. It doesn't mean that you no longer need to get business insurance or liability insurance. You absolutely do. But it sure does provide you more protection in terms of your personal assets and your personal finances. So when it comes to being a sole proprietor, your personal finances and your business finances, they're all one and the same. I'm going to talk about taxes in a little bit, so I won't really go into it right now, but everything is all one. When you're a corporation, your business becomes its own separate legal entity. And why that can be a good thing in terms of liability is if someone wants to sue you, such as a customer, employee, landlord, vendor, and you're a sole proprietor, they can go after your personal assets. If you're a corporation, well, they're going to sue your business, the corporation. They're not going to go after you personally because you personally didn't do anything. Your corporation is what they want to go after. And so they can't go after your personal assets. They can, however, still go after any assets, any money inside your corporation. So again, not eliminating liability, but it does serve as that extra protection for you. They can't take your house or, sue you for personally millions of dollars, but they can go after your corporation. But like I said, and just to reiterate, so important to get business insurance. Next, if you have plans down the road to, grow your business and maybe one day sell that business for a profit, it is a lot easier to do if you're incorporated. Not only that, if you are going to sell your corporation, you could take advantage of the lifetime capital gains exemption. This exemption could reduce or completely eliminate any capital gains tax that you would have to pay if you were to sell your business. This could literally be saving you hundreds of thousands of dollars. Next, well, if you want to pass on your business to, say, your children or somebody else, the great thing about being a corporation is because it's its own legal entity, it will continue to survive after you've died. When you're a sole proprietor, when you die, your business is done as well. Next, name protection. So I think so many people don't realize this, but it's actually really important, especially if the name of your business is essential to your business. So when you incorporate your business, you receive name protection for your business in the jurisdiction that you incorporate. Now, I'm not going to go too much into that, but when you incorporate, you can either do it provincially or federally. So if you incorporate in the province of Ontario, that means that no one can register their business using the same business name that you do in Ontario. And if you do it federally, then you are protected across the whole country. Now you may be thinking, well, I'm a sole proprietor and I registered my business. Doesn't that provide me with some name protection as well? Well, it does. It can prevent other sole proprietors from registering their business with your business name. But if someone wants to incorporate their business with your business name, they may still get approved, which means, not as much name protection as you thought. The only other thing that you could do if you don't want to incorporate, you want to stay a sole proprietor and you do want that name protection, is to trademark your business name. Next, credibility. I know it may sound kind of crazy because, hey, who cares what your business structure is, whether you're a sole proprietor or a corporation? Your business has credibility based on what the business is and you being the business owner. But I've personally felt once I incorporated my business, a lot of people took me way more seriously. So part of my business is working with really big brands and clients, and well, it honestly has been a great negotiation tactic using the fact that I run my own corporation, I have this name protection, I have more liability protection, all this kind of stuff for me to actually negotiate for some higher rates. So honestly, you may not really think about it, but it actually is pretty valuable. You do get some extra credibility if you do incorporate your business. Next, you only have to incorporate your business once. Now, obviously, it actually is kind of costly to incorporate your business depending on what route you go. But when you're a sole proprietor, you have to renew your business registration every 5 years, and there is a cost to that. Next, it may be easier for you to secure, credit or getting a loan from a bank if you are incorporated. And typically, banks will offer lower interest rates to corporations compared to sole proprietors. So, depending on what your business is, and if you do need to get some credit, this may actually save you some money. And lastly, we've got tax savings. I feel like that and liability protection are the two main, things or advantages that I hear people kind of talk about when they're like, oh, I'm thinking of incorporating. And yes, depending on your business, you could save substantial money if you incorporate your business. But let me kind of explain how that actually works. So when you're a sole proprietor, like I kind of mentioned earlier, your personal finances, your business finances, they're all commingled into one. And so what that means is your business revenue minus your business expenses, whatever's left over, that all gets taxed at your personal marginal tax rate. Now, if you're in a low tax bracket, and many of you, and I certainly was when I first started my business, it may not be that big of a deal. But if your business starts growing and earning more income and pushes you into a higher tax bracket, that could mean that you're gonna be paying quite a bit in tax. Now, I don't generally like to say too many rules of thumb and stuff like that because people just run with it and think that is like the thing that they should do. Again, it's just like a kind of baseline or something to start with. But in general, the rule of thumb that I've been seeing a lot, and it does kind of make sense, if your business is earning over 6 figures or 6 figures and up, then it may make sense for you to incorporate your business. But I would say, caveat, especially if you don't need all of the money in your business. For example, if you're earning $100,000, but then you're spending quite a bit in business expenses and whatever is left over, you have to save for taxes and then your living costs and there's nothing extra, then it doesn't actually really make sense for you to incorporate because you're not really going to be saving any extra money. If you're draining everything out of that corporation, you can't leave any of that money inside the corporation. But if you're earning, a good amount of business revenue, your business expenses are pretty low, you got your taxes all good, and there's excess money that you actually don't need to spend personally, you can leave within the business, then it may make more sense to actually incorporate your business. Keep it in there, because whatever money is left in that corporation is going to be taxed at the corporate tax rate, not your personal tax rate, and that is a much lower tax rate. And then all you'd have to do then is pay yourself a salary or dividends or a combination of both. So with that, let me explain why I waited so long to incorporate, and this may make sense and maybe give you a good idea of what maybe makes sense for you. So my business has been earning 6 figures and up for the past 4 years. The first year, I think it was about $73,000 is what I earned, and then after that it was $100,000, and it kept on growing ever since. That being said, in those first few years of my business, I had, pretty substantial business expenses, and also I had quite a bit of RRSP room. So whatever I could, I would throw it into my RRSP, and then I would use the tax deductions that I would get from contributing to my RRSP to offset my tax bill. So for me, for years, until I was able to max out my RRSP and no longer had any more room to contribute so I can lower my tax bill, it really didn't make sense for me to incorporate. I was able to get into a much lower tax bracket and then pay not that much tax, mainly because of my RRSP contributions. But then in 2021, I was able to max out my RRSP pretty, soon into that year, and realized, okay, I need some more tax strategies so I can not pay as much tax. I don't want everything I earn to be taxed at my marginal tax rate. And also I was projecting to earn kind of the most I'd ever earned in my business that year. So I was trying to find some ways to, pay myself a little bit and keep most of it in the business so I can continue to grow and also keep my personal tax rate quite low. Let me share now some of the reasons why it may not make any sense for you to incorporate your business. If your business is very simple, very low risk, so there's a very low likelihood that you'll ever be sued, and you aren't earning a substantial amount of business revenue, you're keeping it pretty modest, it does not make sense to incorporate. It is just going to cost you quite a bit of money, which would then obviously eat into your profits. So if you're, again, starting out, or you've got just a very simple kind of low, income generating business, I would say sole proprietorship probably would make the most sense for you. I would wait until it does make sense to incorporate. Another reason is if you are unsure if your business is going to succeed. So one thing I don't know if I've shared before, but in addition to having a sole proprietorship, there was 1 year, I think it was in 2018, that me and a friend of mine actually started a business together. It was a partnership, which is a very similar business structure to a sole proprietor, but with 2 people. And it flopped. It was fun. We had a good time, but we did not earn any money. I'm so glad that we just kept it as a partnership and didn't think, oh, we're gonna, make so much money, let's incorporate right away, because, well, it folded a year later. So if you are just not sure if this is going to succeed, you just want to take your baby steps, keep it as a sole proprietorship. Okay, so with that, that's hopefully plenty of information for you to think about, ruminate to see if this is the right decision for you. But again, if you're not sure, always highly recommend you seek advice from a professional, like a business accountant. I'm going to leave some kind of suggestions for people that I've actually worked with in case you want to check them out. I also have a bunch of recommendations for, financial professionals or business accountants and people that may help you on my website, on my favorite things page, so make sure to check that out. Also, if you are just starting out and you're a sole proprietor and you don't use any accounting software, you want to get things organized. For a long time, especially when I was a side hustler, I just use a spreadsheet. And so I have a bunch of budget spreadsheets specifically for people who just have a side hustle on top of their day job, or who are self-employed and just want to do something very simple and basic with a spreadsheet. So make sure to check out my shop page for all of my different budget spreadsheets. So that is it for me. I'm sure that is plenty of information for you. So thank you so much for watching. Make sure to like this video if you liked it, and subscribe if you're not already subscribed. And of course, please let me know what you think in the comments, or if you have any follow-up questions that you want, please let me know in the comments. I would really appreciate it. And honestly, I pretty much answer every single comment I get. So yeah, thanks again for watching, and I will see you in my next video.